I'm very pleased to introduce our next speaker, who's also staying up late with us. So thank you very much. Our next speaker is Natalie Wallace. She's the Global Head of Sustainable Investment at Natixis Investment Managers. And in this role, she drives the firm's sustainable investment strategy across its distribution network, its affiliated investment managers, and as part of industry-wide initiatives. Natalie also serves on the Natixis Investment Managers Investment and International Executive Committees. She's a long-term advocate of sustainable economic development and finance, having served as Head of Strategy and Development at Morova, Global Head of ESG Investment Strategy at State Street Global Advisors, and spent substantial time advancing collaborative engagement on climate-related risks, such as Climate Action 100+, and the Investor Initiative for Sustainable Forests. She served as the French Foreign Trade Advisor from 2014 to 2020 and is a member of the CFA Institute's ESG Technical Committee. Let me put up your slides for you now, Natalie. Here you are, and I'll pass over to you. Just let me know as you want me to walk through them.
Well, thank you very much, Alistair, and good morning, everybody. A real pleasure to be here with you today. And thank you, Alistair, again for having us. We are going to talk about governance, and obviously governance of corporate issues has a very high impact on operational and financial performance for these companies as well for investors, as we saw in the poll that you just ran, Alistair. I just want to mention that in the context of the Russia's attack on Ukraine, which is Europe's most intense conflict since the Second World War and the Bosnian conflict, it is clear that governance and corporate governance, after 2 years of a global pandemic, has really come to the forefront of delivering again on operational performance, but also in delivering to society and all stakeholders. It is unclear how the war is going to unfold, but what is clear that the people of Ukraine are suffering an immense loss right now, and that the people in Russia are also going to be impacted directly. And the gravity of the moment imposes radical decisions which will have consequences on our lives and on corporate governance and how they actually position and behave in this uncertain environment. It is a small price to pay compared to the people of Ukraine, but definitely something that investors are going to look at. Assessing good governance starts with this premise of companies being part of an ecosystem and having to answer now to different stakeholders, but really the fact, and it's been proven in academic research as well as empirical evidence as well as performance, strict performance, is that poor corporate governance lead to operational and financial underperformance. And it's clear that investors need to pay attention to how governance is handled at corporate level. With that introduction, I want to briefly outline what we have prepared for you tonight, and I look forward for questions, hopefully from the audience. But the first thing is we'll go through understanding the context of governance, meaning why does governance and sustainability matter in the world. It's not only to deliver good performance, it's also because of the pressure of more regulation around the world, and we look into this. The second is we look at exactly what is corporate governance, both from a board level perspective as well as managing environmental and social consideration. The third one, we took a deeper dive in Asia specifically to see what are the stewardship and governance codes that have been put in place. And last, of shareholder resolution, and we see what governance, what share governance has in this shareholder resolution. What are investors engaging companies and voting policies on, as well as understanding how other issues such as environmental and social consideration are rising over the last few years. So without further ado, let's dive into the first slide, why sustainability matters for investors. What we see here is really a sample. It's not even the full-fledged review of either stewardship code, governance code, as well as some mandatory and regulatory requirements that are emerging all over the world. So you can see here, what is interesting is that in terms of governance and at the country level, it really all started in the UK with the UK Stewardship Code and really moved its way around the world. Currently, there are more than 16 country stewardship codes, as well as one international, which is the ICGN. We'll go through that. But what you can see also in Asia, and we'll do a deeper dive on that, is that Singapore, Hong Kong, Japan, even South Korea, as well as I said, the ICGN really covers that part of the world. Really what is important here for investors is this is, I would say, just to start. We're going to see more and more demand on corporate issuers in terms of disclosures. You see here in the UK, mandatory climate-related disclosures, TCFD aligned. Same in the Singapore with the Singapore Green Taxonomy, which is going to really shape the way corporate issuers are actually disclosing on their climate risk, as well as other environmental and social risks. So governance of those matters is actually extremely important as more and more companies that are change makers and have been positioning for this kind of disclosure will be actually better armed to face an environment where regulatory trends are going to be even more demanding. So that's really important for investors to understand how a company, from again at the corporate level, corporate governance level, at the board level, but as well as at the management and broadly through the companies, how they are taking this seriously. Are they going actually to implement strategies that are going to be again helpful for their operational performance? If we move to the next slide, what we see here is what is stewardship and how do you measure good governance practices. So it's really there's two kind of, when we talk about governance, there's two kinds of governance. One is the corporate level governance. These are policies and practices related to companies' leadership. Here we're talking board level matters, such as board accountability, shareholders' rights and engagement, board independence, and we see that's really important. We see that in the trends, and effectiveness, alignment and compensation, alignment of compensation to sustainability strategy, and we see that again. That's something that has emerged over the last few years in terms of shareholders' revolution. The second governance that an investor should look at is governance of environmental and societal consideration. Here we're talking about, and this is actually taken directly from the Sustainability Accounting Standard Board. So these are financially material consideration that could impact the company's performance and thus could impact the financial return for the investor in that company. And here we're talking about, again, either environmental or data management. I want to bring your attention to the bottom 2 or 3, which are supply chain management. Obviously, we uncovered that pretty drastically during the pandemic, as well as with the war in Ukraine. Materials sourcing, here again, really a big focus over the last few months and few days. And then regulatory capture and political influence. And we see that's a very important matter in terms of shareholders resolution. If I may, I'll jump to the next slide. This is pretty much self-explanatory. I mentioned there are 16 country codes. Here are the ones that are related to Asia specifically. So in Hong Kong, we have the Corporate Governance Code and Corporate Governance Report. In Japan, the Corporate Governance Code. In Singapore, the Code of Corporate Governance. And then there is the ICGN Global Corporate Governance Principles, which really covers a broad umbrella of countries
when no national code or framework is established. So you see that actually it is possible today to measure a company and its governance practice based on its country of location in these major countries or regions. And that's important for investors because it gives a framework of understanding what is good, again, corporate business practices in that specific country, and to be able to compare and contrast companies within those regions. So that's really important to have these frameworks. It helps normalize a bit the engagement. It helps normalize the best practices, understanding the best practices within countries. And I'll jump then on the next slide, which I think is one of the most interesting slides, is to understand, one, we went through the fact that it matters, that the regulatory trends are changing, there are corporate governance codes in place by country. So we have all the tools to be able to measure this corporate governance, but we see here where actually this is a map, a heat map produced by Morningstar of the shareholders' proposal in 2021. Again, I want to bring your attention to the top right-hand corner, where you see here's ESG governance arrangement, ESG incentive compensation, we talked about that, independence of boards, where it gathered 39% of average adjusted support, which is pretty high. And then human rights expertise and human rights, which is also embedded in other shareholders' proposal. So you can see that ESG governance takes a big share of the shareholders' proposal landscape. I want to bring your attention as well, we mentioned that, is the corporate influence in the country of operation. And here you see corporate political influence, corporate lobbying, as well as political spending. Again, 44% average adjusted support, so pretty high level here. This is something that is really relevant and very significant in terms of attention for investors. Lastly, I want to also mention the importance of other environmental and social issues in shareholder proposal. Linked to governance in one way or the other, I would venture to say that climate reporting is a governance issue, meaning that it is important for a company to be extremely transparent and have the right governance structure in place to be reporting on climate-related risk, both transition and adaptation, especially with the rise of physical risk, meaning, as John mentioned, wide related weather events such as fires and sea level rise and flooding, which can create pretty dramatic impact on a company. So that's something that investors, as you can see, at 50%, very much supporting in terms of shareholder proposal. I want to finish by the other societal and social related shareholder proposal. Here you see diversity and inclusion, equity inclusion as well, worker protection and treatment, really high in terms of attention, especially with the pandemic over the last 2 years, and as well as arbitration and working environment where you can have pretty good representation of workers. So these are the as well as human and civil rights, which gathered 49% of support in content and technology governance. So you can see governance is really much permeating across the different shareholder proposal. This is a matter of, as we saw, operational performance, financial return for investors. So that's something that is going to remain on top of the agenda in terms of sustainable investment. A very big point I think Joy mentioned, and I want to reiterate here. One, portfolios, if we talk about climate risk and transitioning portfolios to a low carbon economy or even a net zero market economy, portfolios do not emit GHG. They are the underlying portfolio holding companies that do have to scale back in terms of emission. And so engagement and governance related matter are really at the forefront of this battle to get on a new path in terms of, again, emissions for our global economy. And not to forget about, again, engaging and looking at governance that have also a big perspective or a big impact on understanding how this transition will impact the underprivileged and lower income brackets, not only in poor country or developing countries, but also in developed markets. So I'll stop here so that we can go into the Q&A.
Thank you very much, Natalie. Great that we can see you all now too. Thanks for sorting that, and an excellent presentation. So well done there. Please, yeah, everyone sharing your questions. We've got time. I'd love to put some to Natalie. Natalie, one thing that jumped out to me there was just looking at the governance standards you shared for different countries. Just wondering how they compare to one another. Are they all off a similar basis? What kind of regional differences do you see? And then do you see a case for maybe regions without such governance codes having poorer governance? And does that make them regions that are harder to invest in?
These are excellent questions. So there are cultural differences. It is important not to be measuring a company based in the UK within the corporate governance code of Japan, for example, because there are business practices, there are cultural differences that are really important to take into consideration. It doesn't mean that one is better than the other. It means that there are, again, cultural and business practices that have to be respected, if you will. So that's really important. That said, we are looking at potentially countries being able to attract capital. And thus having, I would say, a best-in-class corporate governance framework and code is really important to attract capital relative to other jurisdictions. So that's something that we think is key. In terms of the countries that do not have a framework, I think it's in the world where we're talking now about, divestment with environment that are potentially less conducive to sustainable investing. I think this is important to keep in mind that engagement is always better than divestment, because once you divested, first, you don't have a voice, and second, the problem doesn't go away. I think John was clear about that. So even in the case of poor governance, it is important to have this voice, have this engagement, to keep on improving. I think investors really have a role to play by engaging. That said, there are potentially some dire straits environment where it is really, really difficult. So it's really case by case or country by country. Again, it has also to do with the environment in terms of protection of investors, protection of all stakeholders. But again, in general, and I would say engagement is always better to, again, and having this improvement over time is always better. Again, the problem will not go away if you divest it out. So I hope I answered the question. We could go in by case, but I think in general that's no,
that's very good point. So other question. What is a leading indicator for good governance? So there's quantifiable scores, but whether it's more qualitative than quantitative, but how do you maybe identify a company that might not have the best governance, but you think is as a kind of a grow on the governance standpoint in the future?
That's a very good question. I think it's the culture of a company, and the drive by the board and the top management to understand that they are part of an ecosystem and that they have to cater to stakeholders. So what we're saying here is that there might not be the governance structure, there might not be the policies in place, but understanding the culture and the long-term vision and implementation of a management and a board, I think can actually give some perspective. So again, having this conversation with the government, the management and the board level, I think are crucial to really get a sense of where do they feel their role is in society. And that will lead to many good conversation in terms of then implementing the right policies.
Great. Thank you so much, Natalie. I know it's late where you are. Really appreciate you staying up with us. And I know you've got a big day ahead of yourself tomorrow, so we'll let you get some rest. But thanks for that. As with always, the presentation will be made available to everybody. But Natalie, thanks so much for joining, and I really appreciate it.
Thank you. A real pleasure. Thank you for having me, Alistair.